Hello everyone, welcome to the market opening bell on Wednesday, March 26. Let's first review the performance of Hong Kong stocks on Tuesday. The Hang Seng Index opened 262 points lower, briefly narrowing its decline to 158 points at 23,747 before sliding further. It fell as much as 583 points to a low of 23,321, closing down 561 points or 2.3% at 23,344. The H-share index dropped 234 points or 2.7% to 8,616, while the Hang Seng Tech Index fell 219 points or 3.8% to 5,517. Total market turnover for the day was 2,852 billion Hong Kong dollars. Mainland Chinese markets extended the weak oscillations into the afternoon, with the Shanghai Composite Index closing at 3,369, down 1 point, and the Shenzhen Component Index closing at 10,649, down 46 points or 0.4%. Combined turnover in Shanghai and Shenzhen totaled 1.2582 trillion yuan, a decrease of 192.4 billion yuan from the previous day. The yuan midpoint rate fell for the fourth consecutive day, hitting a more than 2 months low at 7.1788 against the US dollar, down 8 pips from the previous trading day, the lowest since January 20. In the spot market, the onshore renminbi hovered around 7.25, while the offshore renminbi breached the 7.26 level. In the Hong Kong market, Xiaomi raised a net 42.5 billion Hong Kong dollar through a top-up share placement at the 6.6% discount. Its stock fell 6.3% for the day, closing at 53.4 Hong Kong dollars, barely holding above the placement price. BYD chairman Wang Chuanfu announced a total sales target of 5.5 million vehicles for this year, with overseas sales expected to exceed 800,000 units. Sales growth in the Chinese markets projected at around 30%, while overseas markets are expected to see a 91.8% increase. BYD anticipates 2025 to be a major product year, with its 4 brands planning to launch nearly 20 new models, while 21 existing models will undergo upgrades or introduce smart driving versions. The company also aims to establish its brand through technology, designing differentiated tech labels to promote the development of premium brands like Yangwang, Denza, and Fangcheng Bao, while increasing investments in AI large-scale models and intelligent computing centers. Here's a quick earnings roundup. Kuaishou reported Q4 2024 total revenue of 35.4 billion yuan, up 8.7% year-on-year, with adjusted net profit of 4.7 billion yuan, up 7.8% year-on-year. E-commerce GMV for the quarter grew 14.4% year-on-year to 462.1 billion yuan, with short video e-commerce GMV surging over 50%. Live streaming revenue was 9.8 billion yuan, with a year-on-year decline narrowing further compared to the previous quarter. The commercialization of Keling AI shows steady acceleration, generating over 100 million yuan in cumulative revenue from its monetization start through February 2025. Bilibili reported 2024 annual results under US GAAP with net revenue of 26.832 billion yuan, up 19.1% year-on-year. Net loss attributable to shareholders narrowed from 4.822 billion yuan last year to 1.347 billion yuan, with a per-share loss of 3.23 yuan. No dividend was declared. Under non-GAAP measures, the full-year adjusted net loss narrowed from 3.414 billion yuan to 38.96 million yuan. During the year, advertising revenue and mobile gaming revenue grew 28% and 40% respectively, with strong growth in high-margin businesses driving gross profit up 61.2% to 8.774 billion yuan. The full-year gross margin improved to 32.7%, and with refined cost controls, the company achieved its first quarterly profit in Q4. Companies announcing earnings today include Bank of China, CITIC Bank, China Life, China Pacific Insurance, Pop Mart, Mengniu Dairy, Chelco, and China Southern Airlines. Bank of China is expected to report 2024 operating income between 609.3 billion and 638.3 billion yuan, compared to 624.1 billion yuan in 2023, representing a year-on-year change of minus 2.4% to plus 2.3%. Net profit is projected to range from 228.4 billion to 234.7 billion yuan, compared to 231.9 billion yuan in 2023, a year-on-year change of minus 1.5% to plus 1.2%. This reflects challenges from China's macroeconomic environment, real estate loan pressures, and expected strain on net interest margins. Market focus will be on management's latest operational guidance, including net interest margin trends, fee income, especially wealth management related, capital replenishment plans, post-capital strategies, consumer and SME demand, asset quality, particularly developer and retail loans, risks in overcapacity industries, and the bank's dividend commitment, such as payout ratio. China Life previously issued a profit alert, expecting net profit attributable to parent company shareholders under Chinese accounting standards for 2024 to range from 102.3 billion to 112.6 billion yuan, a year-on-year increase of approximately 100% to 120%. The company highlighted its adherence to asset liability matching, long-term investment, value investing, and prudent investment principles, seizing market opportunities for cross-cycle allocations and optimizing its equity investment structure. Following a low-level oscillation and rapid rebound in the 224 stock market, total investment income saw a significant year-on-year increase. In the US market, a decline in the March Consumer Confidence Index raised market concerns. The Dow Jones Industrial Average, which at one point rose by 113 points, narrowed its gains to close up just 4 points at 42,587. The Nasdaq closed at 18,271, up 83 points or 0.5%, while the S&P 500 ended at 5,776, up 9 points or 0.16%. The Nasdaq Golden Dragon China Index, reflecting the performance of Chinese concept stocks, fell 1.2% by the close. Among them, Alibaba dropped 1.3% and JD.com declined 2.6%. The Hang Seng Index Night Futures closed at 23,478, up 134 points, trading 134 points above the Hang Seng Index cash close. On the individual stock front, Tesla, which surged nearly 12% the previous day, rose another 3.45% on Tuesday, closing at $287.99 US. Apple gained 1.4%, Amazon rose 1.2%, Microsoft increased 0.5%, while Nvidia fell 0.6%. Regarding economic data, the Conference Board reported that the US Consumer Confidence Index for March dropped to 92.9, a sharp decline of 7.2 points from the previous month, hitting its lowest level since February 2021. This figure fell below the market's expectation of 94 and marked the fourth consecutive month of decline. Analysts noted that U.S. households are increasingly worried about an economic recession and rising inflation due to tariffs. U.S. new home sales in February grew 1.8% with a seasonally adjusted annual rate of 676,000 units, rebounding from a revised 6.9% drop in January, though slightly below the market's expectation of 680,000 units. High mortgage rates continue to dampen demand, putting pressure on sales. Additionally, the Richmond Fed Manufacturing Index for March unexpectedly fell from 6 in February to minus 4, signaling a renewed downturn in manufacturing activity. Our stock pick today is BLOKS, stock code 325. BLOKS announced its financial results for the year ending December 31st, 2024. During the period, sales revenue reached 2.24 billion yuan, a significant year-on-year increase of 155.6% compared to 2023. This growth was primarily driven by a large number of SKUs that cater to all demographics, price segments, and the needs of global consumers. In 2024, the group further expanded its price segmentation coverage, launching the Transformers Galaxy version Defender with a suggested retail price of 9.9 yuan per unit, positioned in the ultra-value price segment to increase its SKU offerings. As of December 31st, 2024, the group had achieved a diversified product portfolio of 682 SKUs, including 132 SKUs primarily targeting children under 6 years old, 519 SKUs aimed at consumers aged 6 to 16, and 31 SKUs designed for those over 16. Among these, Ultraman, Transformers, Heroes Infinity, and Kamen Rider were the group's top four best-selling IP product series. In terms of intellectual property (IP), the number of self-developed IPs remained consistent with the figure as of December 31st, 2023, including the children development-oriented Magic BLOKS and the Chinese culture-themed Heroes Infinity. The number of licensed IPs increased from approximately 27 as of December 31st, 2023 to about 50, including Super Sentai, Anime Ultraman series, DC Superman, DC's Batman, Harry Potter, and Star Wars. Looking ahead, the group will continue to seek popular IPs to complement its current product offerings and further expand its target consumer base. Beyond China, the group also sells products in overseas markets and has established subsidiaries in the UK, Indonesia, Malaysia, and Singapore to expand its international presence. In 2024, overseas sales revenue surged 518.2% from 10.4 million yuan in 2023 to 64.2 million yuan, with Indonesia and the United States being the top two revenue generating countries in the group's overseas markets. The group recorded a loss of 398 million yuan for 2024, a 91.8% increase from the 207 million yuan loss in 2023, primarily due to a rise in company's valuation, resulting in a fair value loss of 542 million yuan on convertible redeemable preferred shares. However, adjusted annual profit, non-IFRS measure, saw a substantial sevenfold increase to 584 million yuan, and the adjusted net profit margin rose sharply from 8.3% in 2023 to 26.1% in 2024. The overall gross margin also improved from 47.3% in 2023 to 52.6% in 2024. Recommended buy price 108 Hong Kong dollars, target price $120, stop loss $101. I do not personally hold the above stock.